in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by TractorZoom, delivering insights. If you're looking for a great way to track what's going on in the auction market, there's nothing better out there than iron comps by TractorZoom. So Chip is with Blue Reef Agri-Marketing, and Chip comes on every Tuesday to talk about the markets. Typically record in the morning, but since this was reported today, we thought, hey, we'll wait till after the close because how crazy could it possibly get? But man, Chip, we were looking at the corn market really caught some people by surprise.
It sure did. We knew that the January crop report always historically can have some fireworks in it, but man alive, this was a little bit of a, head scratcher, I guess. This thing was explosive today. The two main things that jump out are all it's all in the corn. This was all about corn, this report. 3.8 bushel decrease in yields, down to 172. The low estimate coming into this was 173.8. So that was a big change. That was bullish in its own right. But probably the other thing was the quarterly stocks. Now remember, this is different than ending stocks. Our ending stocks did go down 150 million to 1.552 billion bushels. And that was towards the low. That was obviously lower than the average estimate. Now with this, the USDA decreased corn usage by 250 million. In my opinion, that's forward looking due to the fact that the quarterly stocks were so friendly that I believe they feel, and statistically on paper, that we've got a ration demand. And so they're proactively assuming that prices are going higher, and those higher prices are going to eventually slow demand down. So they did cut out 250 million bushels of corn usage. But the real stunner of this thing is the quarterly stocks number. Now this is as of December 1st. This is not the ending stocks. The ending stocks is what the USDA projects at 1.55 billion, what we're going to have at the end of the marketing year. Quarterly stocks is what, as of December 1st, how many stocks were available in farmer-owned storage, commercial storage, and in transit in rail and barge. And it came in at 11.322 billion bushels. That was almost exactly the same as 1 year ago. And, all the while, we're raising a pretty big crop here. And the big kicker is it was 630 million bushels below the average estimate, and about 270 million bushels below the low estimate. So this thing was significantly lower than what was expected as far as stocks go. Essentially the equivalent of a year ago with, a big crop. So all about demand, huge demand, even though the USDA is cutting it in, I guess proactively due to the assumption we're going to ration demand on this rally. And then the 3.8 bushel yield loss. And we had to limit up. First, I don't know, the numbers here. First time we've had to limit up corn for a long, long time. 25 cents higher is the limit in corn. Closed the March corn at 517 and a quarter. Several year highs there. New crop December, 458 and a half. Highest we've had in many, many years as far as new crop goes this far out. And so that's where the fireworks we're seeing today was in the corn market. Beans were all, it wasn't negative necessarily. It wasn't a bearish report on beans, but it was all within expectations. They went down a half a bushel on yields to 50.2. Demand left unchanged, but the carryout down 35 million to 140 million. That was basically right on the average estimate. Total production 4.135 billion. Within 20 million bushels of the average estimate. Even the quarterly stocks number, 2.933, that was actually 13 million bushels above the average estimate. So nothing was shocking in the bean number across the board. They left the Brazilian bean crop unchanged at 133 million. And they did drop the Argentine bean crop 2 million tons to 48. But historically, USDA is the last in line to move South American production figures. The market doesn't really look to the USDA for up to the minute direction or crop size as far as it relates to South America or other world numbers. They're very reactionary. They'll be the last to move that. So the market looks instead to private estimates out of Brazil and the Southern Hemisphere. But that's kind of where it was at, Casey. There's a lot of numbers in there, but the most explosive was corn. Wildly bullish. That stocks number was really, really a shocker to the market. And synthetically in the options trade, the corn market was likely settled up about another 7 cents, 7.5 cents. And so it's likely that tonight we gap the market higher. Where you stop this thing, nobody knows, right? You never know a market like this, how it ends and how high you got to go to start rationing demand. Was interesting to see today the deferred livestock futures finally figuring out we got a real problem here with soy oil surging higher, and you're looking at $465 soy meal and $5 corn, and these deferred livestock futures today finally caught some wind of that. And they're starting to rally in the back end, knowing, hey, we got to keep up and do our part to, keep people solvent in the livestock industry with $5 corn and $460 soy meal.
Yeah, that's some pretty steep math compared to what stuff's been coming for out there. Talk about wheat for a minute. So hard red winter wheat had a pretty good run today too. It seems like it's up almost 30 cents, I think, last time I looked.
Yeah, I think the wheat market's more of a follower right now. There wasn't anything necessarily wildly bullish in this wheat report today. Mm-hmm. They did cut our old crop carryout just a little bit, 836 million, down 26 million, or 26 million under the average estimate. Nothing wildly bullish there. The planted acreage number was actually maybe a touch higher, just right at 32 million total acres. The average estimate was 31.5. So there's nothing in the report necessarily that was friendly to the wheat. I think the wheat's also reacting to some news out of Russia about how much when are they going to start this export tax? How much is it going to be? And that's coming up supposedly in February. There was some talk that maybe we're going to start that early. Allegedly, President Putin over there is still not happy that domestic wheat prices have not reacted lower. And so I think the wheat markets may be caught in, kind of some unknown about what's going on in Russia and what they're going to do as far as exports. And, that's a back and forth. You never know till after the fact there. But, and obviously corn being limit up, a lot easy reason to buy wheat. There's no reason wheat's going to go lower when corn's limit up, and one of the most bullish, January crop reports in the case of corn in many, many years, and arguably ever from the stocks report standpoint with that big of a cut to the stocks.
Right.
That was just a real outlier there. And so spilling over, easy to buy the wheat market. The funds don't have much of a position one way or the other in the wheat market. They're loaded up in corn. They're loaded up in beans on the long side. They really don't have much of a position built up in wheat. So wheat might just be playing a little catch up to what corn's doing, reacting to some of these rumors out of Russia about, sometimes where there's smoke, there's fire. Obviously they have a problem if they're contemplating an export ban or an export tax of some sort.
Yeah, right.
There is a problem in that Black Sea area, Russia specifically. Yeah. And when there's smoke, there's fire. And when corn's limit up, it's easy to buy the wheat market.
Right. Okay. One more thing. Actually, two more things. the strength of the dollar right now comparatively to what's going on, and as you take a look at the export market, feels like there's still a lot of fuel out there for exports based on how the dollar is comparatively to the rest of the world right now. But as these prices keep ratcheting up, what's your thought about exports and how's that all playing together right now?
Yeah, so that's a great question. That's a little bit of a moving target. Even though prices are high here, we're north of $14 now in on March and May bean futures. We've seen China continue to buy U.S. beans. I think both Monday and Tuesday. This morning there were some fresh bean sales announced to China, and so some of that is going to depend on what's the final crop size out of South America and how much do they have to export here in the February through April, May timeframe. The dollar is at a pretty critical point here, in my opinion, on a long-term weekly chart. Down in this 88 to 90 area. We're trading right at 90 right now on the U.S. dollar index. That's been some old highs from back like 08, 09, 2010. From a few years ago, we spent a lot of time going sideways about, the better part of not quite half a year in this 88 to 90 range. And so we're kind of in a pretty important support area. We've seen a little bit of pushback. The dollar's had a little bit of a bounce, but it kind of reversed back lower today. So in my mind, if you push under the 88 area on the dollar, that opens the door up for a whole nother move to the downside, and probably is going to maybe throw some fuel on this inflationary talk, across all commodities. Obviously, the grain markets have their own fundamental reason why it's bullish, but if the dollar would break under 88 and China keeps buying and the rest of the world keeps buying, it's going to throw some additional fuel on this bull fire we got. Crude oil, kind of same thing. Crude oil's, north of $53 now. It's just quietly, climbs 50, 60, 80 cents a day. And now we're north of $53 there. And so it kind of plays in, I think, with this whole inflationary type, environment that we're in, and the grain market, would be rallying on its own right, but now you kind of put this inflationary type talk in, and it's a little bit of a wild card, new administration coming in and a lot of unknowns with what's going to happen. They're going to be shutdowns. How's this COVID thing going to work? What's the tone of this new administration going to be to ag? Biden said publicly he wants to ban fracking. Will he follow through on that? That's bullish crude oil and maybe breathes a little more margin into ethanol if that's going to happen. The EPA, already has been a little bit negative to ethanol as it has been, and what's their tone going to be? It might take a few months to figure a lot of these things out, but this thing's going to get very interesting in 2021. It's going to keep us all on our toes.
Yeah, so that was my next question I was going to ask you. With crude oil coming up the way it has today, especially closing up almost 93 cents today, and then you start looking at the price of corn to the price of ethanol, and then how those two play together. You pretty well answered that, but it's you could start seeing some, especially if the fracking thing takes hold, and he does something like that. There just might not be enough oil out there, just from a price standpoint, to where ethanol doesn't make sense anymore. You see what I'm saying? From a price standpoint.
Oh yeah. No, there's no doubt. That's a margin deal, as is livestock feeding, right? I mean, it's all margins, and so you say, well, how high does corn have to go? It's $5 stop it. It's $5.50 to $6 to $7. It kind of depends on the margins offered on ethanol, the margins in livestock, and every other time we've had a big run like this, eventually it does drag the livestock higher, and I do think you started to see that today. Finally, it's not the animals on feed right now necessarily that are going to get go to the slaughterhouse here, the packing plant, within the next 30 days. It's 3 and 6 months down the road, and you saw these deferred livestock, triple digits higher. Summer hogs, up $1. They're north of 85, right at 85 in the June, and north of 86 in the July. And you finally saw some of these deferred live cattle starting to climb today too, where the August was up $1.10, the Octobers were up $1.15, and here in the nearby they were unchanged to lower. So It's all about margins, and how high is high. I know that's all relative when you start getting to these levels in corn, because it's about the margins in ethanol and livestock, because those are the first two places that you're going to cut demand and start rationing demand. So lots of unknowns out there. This fracking thing plays into that. The dollar plays into that. South American crop size obviously plays into that. The bulk of, as far as Brazilian corn, the USDA did go down 1 million metric tons to 109, but probably about 65% of that crop is a second crop. So they're not even planted yet. They plant that after their beans. So that'll be planted here, probably a month from now, sometime mid-February, 3-4 weeks down the road. And so that's an unknown as far as what that second crop corn is going to be in Brazil. Do they start getting better rains? There's some hints at the long-term forecast maybe that you're going to see a pattern shift. I guess you could argue also that's they get in a real rainy scenario. Maybe that's bullish corn, right? Because if they can't get stuff planted timely, their second crop corn window's a lot smaller down in Brazil. And so if how about a Murphy's Law situation there? They beg for rain all year in the, during their first crop beans, and finally they get a shift but it gets wet and rainy and they can't get their second crop corn planted on time. That's probably about how that goes for them. When you start with a problem, you usually roll that into more and more problems. So a lot of stuff that's ahead of us here to affect these markets, and it's going to get super volatile. I know we talked about that before. I've been preaching that, but and you really haven't seen that yet. It's been straight up, but every day that goes by, I think we're closer and closer to some gut churning volatility.
Yep. Well, yeah, just like you said there. I mean, even though prices are going up, we see some good moves and some stuff. We see things stacking up to look like there's some good moves forward. There's still going to be a lot of volatility, which means sticking to your plan is even more important than it's ever been. So if folks are working on that plan, Chip, and need some questions, just some guidance on what to do and how and where to start, what's the best way to get a hold of you guys at Blue Reef to help them through that?
Yeah, the best way is just give us a call at the office. It's 309-550-7213. We'd love to talk to you. Right now, it feels like help. Why do I need help? Right? I mean, it goes up every day. This is great, but the other side of this is it's going to get treacherous, before it's said and done. And we all know how this story ends. You start choking demand off, and you start raising big crops in both hemispheres, and all of a sudden, that extra supply overwhelms the demand that's already been cut. So the back end of this is going to get dicey, and it's going to require, keeping our nose to the grindstone here and having a plan and taking action.
That's Chip Nellinger with Blue Reef Ag Marketing, and I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions. Also, any blog posts I get posted will show up there as well. Go to MovingIronLLC.com. That's where you find everything Moving Iron related. Moving Iron Summit is going to be held September 15th through the 17th in Nashville, Tennessee. Had to move those January dates from the 20th through the 23rd till to this fall with the whole COVID thing. So hopefully all that gets fixed and we can move forward there. So TractorZoom, great place to check out what's going on in the auction marketplace. If you go to ironcomps.com, that's a product of TractorZoom, you can see what's going on in the auction market there. Great way to check that out. If you decide to go down that route, use Moving Iron at checkout and you get yourself a discount. So with that, I'm Casey Seymour with Chip Nellinger. Let's go with some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here.